Welcome to the show, everyone. It's the Crypto Lark. I'm very excited to have joining me today Ryan Sean Adams. Now, he is the founder of Mythos Capital. He is a crypto investor, an Ethereum economist, and he's also the author of the Bankless newsletter, which discusses some fantastic information about Ethereum. There'll be a link down below to that newsletter. I highly suggest that you sign up to it. I'm getting that newsletter. It's got fantastic information in it, and it's really going to give you that edge when looking at understanding the wider ideas behind Ethereum and the markets overall. So anyway, Ryan, welcome to the show.
Thanks, Lark. It's fantastic to be here. I appreciate it. I think Ethereum economist is rather generous. I'll take it. We might also say an Ethereum enthusiast, and I'm certainly there for that.
Well, I think the interesting question to lead in with is, are you an Ethereum maximalist? And is Ethereum maximalism even a thing?
So I'm sure it is a thing in some cultures. I don't think it's a popular thing, nor do I think it's a prevalent thing. And I actually think that the culture of Ethereum in general tends to minimize it. Part of the reason why I think, Lark, is because Ethereum by its nature is a poly-asset network. That means you could have more than one asset deployed on top of it. We have these things called tokens, ERC20s. Whereas Bitcoin, where you tend to see more maximalists, there can be only one coin sort of cultures. Bitcoin is a mono asset network. So the purpose of the Bitcoin network is just for Bitcoin. The purpose of the Ethereum network is for an entire ecosystem of tokens and open financial products. So all that to say, I don't think Ethereum maximalism is is going to take off. That said, I would not consider myself an Ether maximalist. I would consider myself, if I were to have to paint myself with a brush of anything, it would be the brush of a bankless maximalist. Because when I think about bankless, this is also the name of the newsletter, but it's no accident. That's really why I'm in crypto. It is to replace banks, whether it's a central bank or whether it's a commercial bank, with protocols. And I feel like the term bankless or open finance, or even some aspects of DeFi, actually are the core mission of crypto. And I feel like maybe we'll talk about this, but at some level, Bitcoin maximalists have lost the plot. They have become so infatuated with price go up at all costs that is the only thing they care about. I'm not here just for price go up. Price go up is important. Price go up of ETH, price go up of Bitcoin, that's important. That helps defend the system. We can talk about why that's important. But if at the end of the day, we're not creating a more open financial system that's accessible to anyone with an internet connection, if at the end of the day, price of Bitcoin has gone up and we've just replaced the gold standard with the Bitcoin standard, but there's a new crop of a new set of bankers who are in charge of this whole thing, crypto will have failed in my mind. That's not why I'm here. And I would actively probably fight against crypto if that were the case. I'm here for the bankless, revolution that replace these kings and these bankers with protocols at all levels of the stack, not just, a Bitcoin standard, if you will. So, call me a bankless maximalist, not an ETH maximalist.
You make a really interesting point here that if we see Bitcoin get just co-opted by Wall Street and all these different things, then is that the vision that we all thought about? And we think about Bitcoin, Bitcoin's the world's strongest computing network. It's an amazing thing. It was the tip of the spear. It started this whole revolution. But when we talk about continuing that revolution, Bitcoins basically send money from person A to person B, or use Bitcoin as a digital scarcity savings account. Great use cases, big fan of those use cases. But when we start to talk about everything else, you can see that Bitcoin's way behind. You can't take a trustless loan on Bitcoin. There's stable coins aren't issued on Bitcoin. There's a whole range of use cases that are currently happening on Ethereum that Bitcoin's probably never going to do. And that is where we're talking about a wide world of financial services. Not just sending money from person A to person B, but financial services of changing assets and all these different things. So speaking of decentralized finance, though, there is a topic that we do have to discuss quickly, and that is this recent decentralized finance exploit that we saw with D-Force got drained of $25 $1 million worth of crypto. Then the hacker got found out by his IP address. He kind of self-doxed himself, and so he's had to return the $25 million. But nevertheless, there
Right.
was an exploit that allowed this guy to come in and do that in the first place. Now he was sloppy, so he didn't get away with his $25 million in crypto. But on the
Yeah.
same day, there was also another exploit which didn't get as much attention because it wasn't as big. Had it been the only exploit of the day, I'm sure we would have talked a lot about more. But $300,000 was drained from a pool of tokenized Bitcoin and Ethereum. So all these exploits that we see happening, all these bugs in smart contracts that we see happening, is this bad for decentralized finance, or is this just to be expected?
I would put it more in the this is to be expected category of things. So, I mean, the cases that you're mentioning, both the Uniswap pool, it kind of snafu with the tokenized Bitcoin, and also this DeForce, it's a protocol more specifically called LendFme, are examples of the exact same issue, the exact same bug. This is called a reentrancy bug. This was the same root cause issue that caused the DAO fork in 2016. So it's kind of back to that. And both of these issues were actually known issues, more to do with sloppiness. In the Uniswap case, not in the case of Uniswap, that the code was fine there. It was that somebody created a pool which really wasn't supported by Uniswap. In the case of LendFme, somebody forked Compound, which is another DeFi protocol. A team forked their code base without fully understanding the code base in detail. And as a result of not understanding it, they implemented it in a sloppy way. It's kind of a copy and paste job. There were still references to Compound inside of their source code. And as a result, they let this token, it's an ERC 777 token that shouldn't have been in the protocol. They let that slip by. They supported it. And as a result, an exploit occurred that stole initially all of their funds, like $25 million. So I hear maximalists who say, oh, another DeFi hack, right? That just proves Ethereum and DeFi has been useless all along. And I think back to that's the exact same case that fiat maximalists like the Nouriel Roubini economists of the world used to harp on Bitcoin for, and still do. Every time there's an exchange hack, they say, well, an exchange was hacked. Another crypto bank was hacked. That proves that, be your own bank, and key management doesn't work, and the whole Bitcoin experiment has failed. So I feel like that's a very close-minded perspective. The fact of the matter is this LendFme protocol is implemented in a sloppy way. It wasn't audited in the way it should have been. I haven't talked about it on bankless because frankly, I didn't trust it. It's not a good example to prop up. It'd be like holding up the exchange with the lowest standards and saying that's your example, and that exchange was hacked. Quadriga in Canada was hacked, and therefore this whole Bitcoin experiment is a failure. So to me, it doesn't square up. Now, the one thing that's interesting is LendFme actually, they got back all of their funds because the hacker was sloppy in using some other DeFi protocols, aggregators, and he let his IP address leak. And the Singapore police essentially tracked him down. I don't know if they showed up at his house or what that looks like. And he ended up negotiating and giving back all of the funds. So it was a happy ending. But yes, this sort of thing is going to happen in the future. I think it's important for us to have DeFi options for insurance. Derivative options like Open are providing insurance for smart contracts like DAI. That's an example. Nexus Protocol is also providing technical insurance that would have covered these things. And this will come along, and there'll be options out there as DeFi matures. So it's overblown if you think it's a game ender for DeFi, but at the same time, you should be very careful in chasing rates and chasing protocols, and be very careful where you deposit your crypto in DeFi. This is experimental. I call it the Wild West. It's the frontier. So you need to know what you're doing before you deposit in these protocols and understand what the risk is. None of them are riskless. So you got to weigh the return with the risk.
Those are wise words right there. We are still in the early days of decentralized finance technology. And certainly, if you are going to be experimenting with this technology, keep it to the more trusted players that are well established, your compound finances and your makers and stuff like this. These guys have been around for a while and they're much more established and trustworthy than somebody has just popped up a week ago and they're offering really, really great rates. I mean, be careful, guys. Use common sense. We are going to see scams. We are going to see bad code deployed. So that's something to keep in mind moving forward. And of course, the insurance thing is massive as well. I think that we will see in the future basically integrations where you'll get a one-click thing like, I'm going to lend out my DAI, click, would you like insurance on that? Yes, click, pay this, click, done. That I think will be something coming.
Yeah, I think even the composability element of DeFi will allow you to create something like a token, a DAI token, that is wrapped in insurance as well. So the cool thing about these money Legos is you can take one money Lego, you can add another and create something new. So you could take a DAI and you could wrap it with insurance and just hold that token. You don't even need to click. You just hold an asset and it's already wrapped insurance. You could hold an asset like DAI and use a protocol like Aztec and it could become a private DAI. This is the vision for programmable money and why I think these money protocols, these money Lego primitives are so game changing, really.
Yeah, I like the idea of money Legos because I think it's an easy concept for people to understand. You can just stack these different ideas together and create more and more powerful technology as you go. So, I mean, this all comes into that vision that you talk about of the bankless world, right? So, in looking at that vision, do you see as being some of the biggest things that we really need to achieve that vision of the bankless world?
Well, I think one of the things we need is, you mentioned earlier, the capabilities of the Bitcoin network are fairly limited. You can sort of do two things with Bitcoin. You can hold it and watch, price go up or not. And you can also transact with it. So you can send it from one place to another. Those are the two things you can do on Bitcoin. Everything else on Bitcoin requires something else. Generally, the other money verbs, as we might call them, if you were to lend, or if you were to borrow, or if you were to bet, or if you were to even make payments, those tend to require crypto banks. And you can kind of think of crypto banks. Another name for those is exchanges. I just call them crypto banks because that's what they're evolving into. But they are almost side chains of Bitcoin, and they are trusted. So because Bitcoin, the network, has not decided to scale up its base layer, it's really dependent on these centralized side chains, these crypto banks, in order to complete the other money verbs in the stack. And of course, you can't have a complete global open financial system unless you can do things with your money, like borrow it, like lend it, like pay with it, like even have a stable form of it, as you can with DAI, for example. So the bankless vision is basically that we can do all of those money verbs on a decentralized, permissionless, trustless layer. So Ethereum enables that because it's more expressive. So you can write some script, you can harden that script, you can have that script audited, and you can complete other money verbs. So you could go to Maker, for example, and you could take out a loan as trustlessly as possible, without any paperwork, without any AML, KYC required. And that can be a protocol that other things can build on top of and other things can use. So I would say the key thing is building out this set of money verbs. Insure, that's another money verb. And we're probably a few months into the insure verb. Stabilize, that's another money verb. DAI, the project, Maker, the project has been around for 2 years. We're starting on that. Borrow, lend, we've got protocols like Compound and Maker and others that do that. DYDX, that's for margin. That's another sort of verb if you want to kind of bet and go long with some margin loans. So I would say that's key, filling out those money verbs. And then it takes a bold set of pioneers to actually beta test this thing. So that's what DeFi users are doing. Like we're going out west, we're beta testing, maybe alpha testing this entire open financial system for the rest of the world. And if it blows up, and when it blows up, it'll blow up on these early users. Now, the upside to this is we get to learn these skill sets and front run the opportunity. There's upside in protocols like Ether, which is essentially, a store of value, programmable money Lego for Ethereum. That's, Ethereum's native coin. There's upside in other protocol assets too. So there's upside, there's reward, but there's also a tremendous amount of risk. So I think those are the key things we need. We need to get all of those money verbs together with decentralized, trustless money Lego, make them as trustless as possible. We need a group of pioneers to test them, scale them up. And then over time, they will harden and they will get better and they will become more fundamental to how we do commerce. And hopefully they form the backbone of this open financial system, this bankless system to the world, where when I say bankless, it doesn't mean we're going to eliminate all banks. That's not the goal, but we'll need less of them. We'll need fewer of them. We can accomplish core things in a public way. Money should be a public good. Financial tools, base financial tools like borrowing and lending against collateral you already have, that can be a public good too. And that's a pretty powerful concept.
Absolutely, it is. It's. I imagine that in the future we'll even see a lot of the most successful banks getting on board with this technology and deploying assets to these public open networks. But it'll be very, very interesting how we see all that play out. But I want to ask you this question: is Ethereum money? And if Ethereum is money, is it a good form of money? And what would you say to Bitcoiners who only accept that the fixed hard cap economic model is the only valid economic model for economics in crypto?
Yeah. So first of all, absolutely, Ether is money. So, and I think because Bitcoin is named Bitcoin, the asset, and its network is also called Bitcoin. Whereas Ethereum, the network, is called Ethereum, and its asset is called Ether or ETH or ETH for short form. People get confused, and they don't appreciate the distinction between the asset and the network, right? And there is a distinction. So in Bitcoin, there is the Bitcoin asset, but there's also the Bitcoin network. And in Bitcoin, the primary purpose of the network is to actually move the asset around. You could try to do other things with it, with the Bitcoin block space, but that's the primary purpose. In Ethereum, when we talk about Ethereum, we tend to almost always talk about Ethereum, the network, right? Like Ethereum has great technology and it's got the most developers. And I think that's a very appreciated aspect of Ethereum, of the platform, if you will. It's often categorized by analysts as this is the smart contract platform, right? Well, it is, but we underappreciate Ether, the asset, which is the reserve currency of this entire open financial system and of this entire platform. And Ether as a cryptocurrency is every bit as powerful as Bitcoin. Now, as a money, as a store of value, as a, we might call it a programmable money Lego within Ethereum. I call it economic bandwidth is sort of a concept, because once you have a store of value at the base layer that is trustless in an open financial system, then you can build other cool things on top. You can build DAI, which is essentially in large part, it is Ethereum, that is Ether rather, that's been stabilized. You can only do that when you have a trustless store of value. If DAI were to reach the trillions of dollars, it would require an ETH, a store of value in the trillions of dollars to maintain its trustlessness. So it's very important that ETH becomes and emerges as a store of value, cryptocurrency, crypto asset, reserve asset, a money, if you will, a monetary premium asset in its own right. And it's also important for security. Now, Bitcoiners often say, well, Ether is not good money because it doesn't have a fixed supply schedule. But they forget something. Of course, the Bitcoin monetary policy is 21 million, max, right? But what they don't talk about as often is that block subsidy every time they're printing a new Bitcoin. It's actually going to the economic security budget for the network. And at some point, that security budget is going to run out. At least it's going to run out in terms of Bitcoin denominations. So there's a celebration for every halvening, which is great because supply has been decreased. The supply injection has been decreased. But what's also happened is the security budget has been decreased as well. And I'm not sure that that's something to be celebrated, or at least it's a trade-off worth understanding. Yes, we are fixing our issuance and having only 1 million, but all that means is we're also fixing our security subsidy and only have 21 million worth of security subsidy, 21 million Bitcoin worth for the entirety of the network. And then after that subsidy is gone, it transitions to block space. That is the commodity that Bitcoin has to sell, and it has to be highly valuable in order to secure itself. And it's not a given that that block space will be valuable enough to secure itself for Bitcoin's needs. It's not a given that that block space will be more valuable than the block space of Ethereum, specifically because, as we talked about, it only does two things. You can hold Bitcoin in the Bitcoin network, or you can transact with Bitcoin. Ethereum, on the other side, its monetary policy is a bit more flexible. So it has a minimum necessary issuance policy, minimum necessary issuance to secure the network, right? So its plan under proof of stake is to cut issuance down to the minimum necessary, so around the 1% range, but not to completely fix it, not to completely eliminate issuance in the future, because some of that issuance is going to be necessary to continue to secure the network and to continue to be the highest security, open financial system for the world. So it's less like, it's less dry. It's very much a trade-off. Do you want fixed supply, or with like, who knows, as far as security, like variable security, it could change, or do you want security guarantees without being able to say, yeah, there's only going to be 130 million ETH? And Ethereum has voted for the latter. And I think these two economic experiments are going to be very interesting to see play out. And I'm looking forward to it. I think both are great bets. But does that? So one thing I will say is Bitcoin right now is a better money than Ether, right? Because it has more liquidity and primary. But watch out, Bitcoin. Like, Ether is up and coming. It's building an entire economy with ETH as its reserve asset, and that will fuel its liquidity. I feel pretty good about Ethereum's trade-offs and design choices with respect to monetary policy. I do think that prioritizing security is actually long-term going to pay off for Ethereum relative to Bitcoin. Does that make sense?
Yeah, absolutely. And we've already mentioned a few different things that Ethereum's doing that Bitcoin's not doing or can't do, actually. It's really interesting for me to watch how this is all playing out, because they are both interesting economic models. But what we see happening right now is Ethereum is beating Bitcoin at so many key metrics at the moment. And this is something that I think it's hard to ignore. I mean, we actually saw parity get reached recently with value transfer. So that is a metric that Ethereum is now transferring as much value across the network as Bitcoin is. And that's on an uptrend, whereas the value transfer across the Bitcoin network is on a slight downtrend. And I think Ethereum will grow more and more over time, but we see a lot of different things. There's more developers building on Ethereum by many magnitudes. There's 4 times more developers just building on the base chain. We're not even talking about all the people building on the other stuff. There's more use cases for Ethereum. We have STOs and IPOs and gaming and real estate registries and all these other kind of things. And there's actually more tokenized Bitcoin on Ethereum than there is Bitcoin locked up in the Lightning Network, which is also a crazy metric.
Yeah.
So do you think that, I don't know, maybe Bitcoin has been just taken over by anti-progress interests, or do you think that it's good sitting there as this big golden tank that's just slow and strong and just continues plodding forward without any of these extra features that are going to create an economy around it, really.
Yeah, so I do think there's some hubris there on the Bitcoin side of things. Now, I don't disagree with some of the trade-offs they've made for Bitcoin. They have decided just to be this store of value thing and to make a big bet on the 21 million scarcity meme. And it is a meme. It is a narrative. It is a my friend David Hoffman describes it as it's a pyramid, you know, it's a pyramid game, right? Not a pyramid scam, but it's very much a game of scarcity. Like, can you buy Bitcoin before the rest of the world does? So it's an interesting game to play out, but it's not, I think, as impactful as creating a trustless, bankless, open financial system for the world, which is more along the lines of what Ethereum is doing. Now, if you go back in time, I was just looking at this morning. 4 years ago, so 2016, Ether was trading at $2, right? It's a fledgling network. Bitcoiner maximalists were calling it a scam. There's no point in creating smart contracts. Nothing you can ever do on it, right? So it was trading at $2, about $150 million market cap. So 4 years later, there is now over 9 billion with a B, 9 billion worth of tokenized stablecoins on Ethereum right now, as of this moment, and gangbusters. It's been growing like crazy in the coronavirus era. If you went back in time and told somebody, hey, that $2 Ether project, yeah, in 4 years from now, there's going to be over 9 billion, 8 to 9 billion in stablecoin assets on top of it. Issued by banks, and some of these are decentralized. Like, if somebody went back in time and told you that, what would you do? Like, you would back up the truck.
You're crazy. That's it.
You'd say you're crazy, or if you believe me, yeah, you'd back up the truck and you'd buy as much ETH as possible, because that sounds like a killer use case, right? And that's just one, to your point, like stable coins on Ethereum. That's just one use case of many of the possible use cases, and of many of the use cases that are starting to be successful. So yeah, I think Ethereum has a long path to go. It's very early stage in terms of the success it can drive. I don't begrudge Bitcoin for the kind of the trade-offs it's made, but I'm very glad that Ethereum exists. And in a lot of ways, I think it's a bigger project, has more ambition than the Bitcoin project does.
It's really interesting you brought up that point about all the money locked up in stablecoins right now. Like you said, it's just one use case. Just to point it out to everyone, there's also real estate, which is being tokenized on Ethereum. I'm not sure what the value of that's at currently, but I would imagine it's probably crossed over the $1 billion mark by now. There's security tokens, there's rare art, there's gaming items, there's all these different things that are being tokenized on Ethereum. The total network value of things just locked up on Ethereum will, I think, quickly surpass the value of the underlying Ether asset, which is very interesting and a conversation of itself. But I want to ask you this. Ethereum 2.0, it's taken a long time to get out there. Right now, I was looking down the list on CoinGecko today, and there's all these different blockchains, down in the 10 or $20 million market cap range, and they're faster than Ethereum. They've got sharding or whatever other kind of stuff going on. And so is the rollout for Ethereum 2.0 happening too slowly? Or is there a strong risk that another blockchain is going to swoop in and steal Ethereum's thunder?
Well, I would love for Ethereum 2.0 to happen faster, of course. It's not. They're taking their time on it. There have been some changes to kind of consolidate the roadmap with proof of stake and sharding, and reprioritize scalability. But I am more confident right now than I ever have been that ETH 2.0 is coming, and I think we'll see the first, I call it an initial bond offering, but the first staking opportunity with the ETH 2.0 chain this year. I'm very confident of that. So that's going to be very exciting. But when I look at all of the other ETH killers down the list, and you can look at it down the list as you have on CoinGecko, I don't see a project that is scaling both aspects of what it needs to scale. Now, for any crypto network to matter, what it has to do is it has to scale two properties. So the first is what we talk about all the time. That's transactions per second, TPS, right? The amount of transactions you can do in any second. Those transactions have to be trustless. So most of the experiments that we've seen to date rule out 90% of all the ETH killers, because what they do is they sacrifice trustlessness for transactions per second gain, right? So that kind of like nullifies all of those. Like, take out EOS and all the chains that are sacrificing that, right? So that's a whole bunch of them. Now there are some that say, like we're doing trustless transactions per second. It's going to be almost as trustless as Ethereum is. Well, the second thing you have to scale, and this is less talked about in VC circles, but Bitcoiners talk about it all the time, amazingly. And that's what you have to scale is the value of the underlying asset. So I call this economic bandwidth. So you have to scale trustless economic bandwidth. The value of ETH has to go up. It has to be viewed as a monetary asset. Your native asset that backs the security of a base layer crypto network, smart contract network, has to be money. If it's not, then you don't have enough economic bandwidth to support an open financial system. You can't create trustless DAI on top of it. You can't use it to collateralize loans. It becomes a lot like the traditional financial system. You don't have a non-sovereign asset at the base of this thing. And at the end of the day, that's what keeps the entire network decentralized. And that's what keeps the entire network secure. So maybe let's call it, if we're generous, 5 to 10% of ETH killers that they're doing something interesting in the trustless transactions per second space. Not one of them, like 0 of them, are doing anything in the trustless economic bandwidth side of things. They've done things like they've given their early access to their assets to accredited investors and venture capitalists who own them. All of those things tend to erode the monetary premium possibilities of your asset in the future. Mm-hmm. None of them are considered commodities in the US, and that's important too. So like the CFTC, Commodities Exchange, in the commodities regulator in the US, has labeled Bitcoin a commodity and Ethereum a commodity because they're sufficiently decentralized. None of these other assets are. So there is a massive lead that Ethereum still has on the trustless economic bandwidth side of things, market cap of 20 billion, narrative of money, monetary policy that is starting to click with people and starting to make sense. That is not going to be easy to replicate. And it's why you even see ETH killer investors, my friends at Multicoin, for instance, Kyle Samani and friends, they are even saying in their narratives that, hey, if a new base chain is launching, an ETH killer is launching, it should probably stay away from DeFi because Ethereum's kind of got that locked down now. So that, I think, is the reality. An ETH killer, if it ever comes in the future, is certainly not going to be labeled as an ETH killer. It's going to look a lot different than everything we've seen. Mm-hmm. And I don't see it on the top 10, the top 50, the top 100 list at the moment.
There you go. It's pretty interesting what the big investors have been doing recently too. We've actually seen firms like AZ16, right? Andreessen Horowitz. They've bought synthetics, right? They've bought directly into. I think they've bought Maker as well, and they're buying directly into the applications on top of Ethereum, right? So there will be competitors, but I think any of the competitors right now, they've got such just an unbelievable distance to cover to even catch up to where Ethereum is today. And by the time they've caught up to where Ethereum is today, Ethereum is going to be another 10 miles down the road. So anyone trying to take the crown from Ethereum at this point, they got a lot of work to do. The only thing I think we could see is that if Ethereum fails to roll out 2.0 in any meaningful way, but it's happening right now. It's in the process of happening. We've seen even currently with scalability, ZK rollups coming out, and they're providing a lot of extra scalability as well at a layer 2 solution. But I want to move on to this next topic here, because this is a really interesting one. You came out with this just a couple days ago about the final boss for crypto. I like the analogy. So this is the idea of, can crypto overcome the power of the nation state?
Right. Yeah. So that, the final boss in crypto circles has always been the nation state, right? At some point in time, you're playing the video game, and you see kind of lieutenants and bosses pop up, but at some point in time, you've got to face the final boss, and face him head on. And that's really been, for crypto, the nation state's been sort of hanging out in the background. So I think some people think that there was a report, by the way, that triggered this post, which is the Financial Stability Board, is a group of G20 central bankers, essentially created some recommendations for how to regulate stablecoins. One of the more ominous quotes said, basically, I'm paraphrasing here, but basically, if you have to ban decentralized networks, or prohibit was their words, in order to, get your policy done, then you could do it. Like, that's definitely an option on the table, right? So again, the final boss raising its head. What if the G20, the central bankers, get together and they say, no more stable coins, no more decentralized networks. It's illegal. We're going to choke liquidity. They have a lot of powers at their disposal. Some people in crypto, particularly my maximalist friends, they tend to have a bit of hubris about this and say things like, well, Bitcoin is too decentralized. The nation state could never destroy it. I'm not so sure that's the case. Certainly not, at least at this point. The nation state is really good at finding the weak points, whether that's at the social layer, whether that's getting a bug injected somewhere. They could definitely do some damage to even networks like Bitcoin and Ethereum. But the reason I think crypto wins against the final boss in the long run is a simpler reason. And that's just like the game theory of the situation. So let's say you're a nation state, and all the other nation states decide to kind of ban crypto, right? But your nation state decides to adopt crypto and integrate crypto, and particularly networks like Ethereum, permissionless open systems, into your economy, and unleash that wave of innovation, a wave of innovation that I think is going to be akin to the internet. Ethereum is basically adding a value scarcity protocol to TCP/IP, to the internet. So if you're a country that decides to adopt crypto and embrace crypto, and maybe your population does too. And look, in democratic countries, ideally, the population picks who governs them, right? So they can push a government in one direction or another. And if your country does that, it gives you an unfair competitive advantage against all of the other countries. Imagine you wanted to be a powerful nation state in the 90s, and competitive 20 years later. You can't win the next decades to come without something like the internet. And it's the same with crypto. I don't think as a nation state you'll be able to win against your rivals without crypto. So what happens in the game theory is one country decides to adopt it, maybe a powerful country, because their citizens like it. Once that country does, all of the other countries are forced to adopt it or some version of it, or else they won't win the decade. They will be faced with an unfair competitive advantage, and effectively they'll lose. I mean, you could see this. Let's say China bans free open blockchains altogether, like Bitcoin and Ethereum. Well, the most effective thing for the US to do would probably be to embrace those technologies, right? Mm-hmm. And if they do that, then it's going to force China into also embracing open permissionless systems. So that's how I think it plays out. That's how I think crypto does eventually win out against the final boss. Not to say in the short run that nation states could do some damage. They certainly could. But in the long run, I think the genie's out of the bottle, and crypto's gonna win this thing one way or another.
It's like trying to resist the power, the wave of the internet. Nation states just, they won't be able to really stop it, and the ones that are clever will enable it to happen, and they'll take a lot of economic advantage from being behind that, saying, yes, let's make this happen, yes, come innovate here, yes, come build your companies here, yes, we want to have that technology here. And those countries will be the ones that benefit the most. Funny, we keep saying company instead of country. That's kind of what countries have become these days.
Exactly.
Almost.
It feels that way. Totally feels that way.
Really does sometimes. Anyway, Ryan, this has been a super, super amazing chat. So thank you so much for coming on and talking about, economics and crypto and Ethereum. This has been really, really interesting. So thanks as well to everyone who stuck around to the end of this chat. Again, there's a link down below. Check out the newsletter. It's got lots of great info just like that and much, much more in it. So definitely check it out. Ryan, thank you so much.
All right. Thanks, Lark. Appreciate it.